Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips and area reports and all sorts of awesome stuff. Stay tuned today for all your latest property news. House prices are tipped to rise by up to 6% by the end of this year, according to predictions by the ANZ. An ANZ senior economist says that the impact of housing shortages and the tight rental vacancies are outweighing any impact of interest rate rises. Forward indicators, including housing finance approvals and auction clearance rates, suggest that further housing price increases are here in the near term. ANZ predicts growth will slow to about 3% in 24, impacted by rising unemployment and the lagging impact of past rate hikes, as well as slower population growth. They then expect housing prices to re-accelerate to around 4 to 5% in 25, supported by a modest cut in interest rates. The Australian Bureau of Statistics lending indicators data shows that the value of total housing loan refinances remain high at $20 billion in June 23. The ABS head of finance statistics says that borrowers are continuing to switch lenders, looking for better deals as the interest rates rise. More than $350 billion worth of home loans are expected to move from fixed to variable rates in the coming months, despite predictions that it will result in higher levels of loan arrears. Major banks report owners are still coping very well. Bendigo and Adelaide Bank CEO says that they are not seeing material signs of borrower distress in regional or urban areas. Its number of loans 90 days in arrears has risen slightly to 0.46% and remains close to historic lows. Borrowers remain in good shape, with 41% of loans at least 1 year ahead on repayments and 31% of loans 2 years ahead on their repayments. The CommBank has $52 billion worth of mortgages transitioning off fixed rates in the second half of this year. Only 0.43% of its loans are in arrears more than 90 days. Construction of new homes is tipped to fall to the lowest levels in more than a decade. The latest Housing Industry Association Economic and Industry Outlook report says that the number of new home loans commencing construction peaked in June 21. HIA chief economist says that it will continue to decline under the weight of rising interest rates and land costs. He says that more land needs to be approved for the construction of houses and apartment projects, and governments need to lower the tax and regulatory imposts on home building. Additional regulatory requirements imposed this year will add around $25,000 to the cost of a new home. Now, this is the right time for the cycle for governments to invest in public housing stock, because they will get a better return on their investment and they will support capacity within the industry during a trough of activity. The importance of maintaining capacity within domestic manufacturing and among the trades base was never more evident than during the pandemic. Now, according to reports, Perth is running out of greenfield land and is facing a 20,000 home shortfall. Rental vacancies remain at record lows. Established product supply on the market remains very thin. In WA, the Urban Development Index just released its latest new residential land sales data for the June quarter for this year. Now, on face value, the news looks more positive for the land development sector and forward supply. It recorded a 45% lift in new land sales volume for the quarter, coupled with an increase in construction activity, as 15% more lots are under construction for release in the next 12 months compared with last quarter. The good news for prospective buyers is that Perth remains extremely affordable compared with the rest of the country, with the average price of new land sitting at $243,000, which is approximately 40% cheaper than the combined capital city average. While prices are steady and demand remains strong to rampant as population growth continues, Housing supply remains at critically low levels despite the lift in construction activity. Construction activity slowed considerably during the market downturn in the years leading up to the pandemic. And while activity spiked after the building stimulus, there is a lot of ground to make up for due to the chronic undersupply of housing to the market over an extended period. To put the supply issues into perspective, new data suggests that WA could be facing a 20,000 dwelling shortfall over the next 3 years. Now, as always, I'm going to keep you posted on all things property from around Australia. If you are enjoying all the free content, then please do give this little video a like, subscribe to the channel so you don't miss all the latest news. And I will see you all again soon. Bye.